Cashflow Pro offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Hey everybody, good evening. Let me know if you can hear me okay, because unlike this morning, I'm not going to speak for 16 minutes with the microphone not on. Low Roller, good evening. Bitcoin Mania just reached 21,000. Yeah, it was at 21.8 earlier when I looked at it. Once it broke through that 20,000, I tell you, it made a big difference. Ron Park, sound is good. All right, thank you. Bitcoin 21,739. So yeah, I saw it earlier when it hit 21.8. Amazing. So I wonder if that 20,000 will now be the new support instead of the resistance. It'll be interesting to see where that goes. So how's everybody doing tonight? We have been on all day. Let me see if I get a little bit more light here. There we go. We've been on all day. We did an all-day live stream on the market. BDN, how you doing, man? We did an all-day live stream in the market, watching Tesla. It was the first day that the indexes could get in, and it doesn't look like they did. It doesn't look like they decided to get any substantial positions. So we had really low volume today. So the big squeeze continues. We'll see how that goes on Friday. I will be live on Friday all day as well, so we can watch that and trade accordingly. So, my name is James Barber. I'm here to help you maximize your cash flow. If you've got questions, if you've got financial questions, hit me up. Put them in the comments section. Put them in chat. I'm here to answer them. You have my time for the next hour. During our live stream today, we also gave away 3 laptops. So one of our Discord members, one of our patrons, does refurbished laptops, and he offered 3 of them up to our viewers. One of them we gave out during the live chat to a random viewer that guessed on the right number spin, and 2 of them he gave to folks that are Discord members. So that was pretty awesome. If you're interested in becoming a Discord member or joining our Discord channel, you got to sign up as a member of the community on YouTube. You just join us on YouTube or become a patron, and you get access to the Discord server. And we'd love to have you. He did say when we hit 150 or 200 members, he's going to give away 2 more laptops. So it was pretty awesome. The folks that won messaged me privately and said how much it meant to them to actually win that, and it was really touching. It was really touching. So thanks to Sovan for doing that. Sovan was our benefactor. And we really appreciate that. So be sure to thank him if you see him. Hop in the comment section. That was really generous of him. Really generous. Top Gun, how you doing? Yes, that was extremely generous. So he's really enjoying the Discord since he joined it, and he's just wanting to give back. You know, we have really good conversations in there. A lot of the folks in the Discord, most of them are in there from watching the market and doing trading, and we're learning and sharing with each other. Some of the folks in there have joined our mastermind group, which is more narrowly focused on, not narrowly focused, I would say it's more broader focused than on just the stock market, but the goal is to just help each other financially in all areas of finance. That's the hope of the mastermind group. Still growing, but we do have some good members in there, and I share my trades in there with the mastermind group. Try to do it as close to when I make the actual trade as possible. So try to do that live. But yeah, we're just trying to provide value as much as we can. So if you guys have any questions, put them in the chat. Oliver, how's it going? Any word on your Model 3 yet? Any word on the Model 3? No VIN yet. No VIN. All right. Well, hopefully you get it. That'd be cool if you qualify for the, it's been almost 3 months. No, it hasn't been almost 3 months. Didn't you sign up for it when I signed up for mine? I thought you signed up for it when I signed up for mine, which would have been October, end of October. Yeah, October 19th. That's not even 2 months. It hasn't even been 2 months. I'm sure it feels like 3 months, but it hasn't even been 3 months. I mean, it hasn't even been 2 months yet. October 19th, my birthday. My birthday. Alpha Omega. How do you turn 100K into 1 million? I'll tell you how you can turn 1 million into 100K. You can turn 1 million into 100K by just being a Tesla short. Being a Tesla Q. BDN. Yeah, put more zeros on it. That's another good way to do it. That's another good way to do it. I hope that I one day get to show you how to turn 100K into 1 million. We'll have to take that journey together. My current accounts add up to that I'm using in the stock market. My current accounts add up to almost 100K right now. So we'll be seeing where that goes. Now, I can tell you how to turn 150K into less than 100K because I did that last week. Not really, because none of my gains were locked in. But at one point, last Wednesday morning, the positions I had myself in, my accounts added up to 150,000. Unfortunately, Virgin Galactic had a little bit of trouble with their last flight. And it really hurt me. I didn't take my profits, and I should have. So that is a lesson that I learned. I should have booked at least some of those profits, and I would have 125K. And if I took half of my profits, I should have done that. So that was unfortunate. How do you flip 6K to 17K again? Eduardo, you need to flip your whole account. I hear you, man. It can be tough. Obviously, I had too much of my account in on those trades that I was convinced they were a sure thing. Obviously, they were for a small period of time, and that's when I should have backed out and reduced my position. But I didn't, and I should have. You live and learn. So never worry about locking in some of those profits. It's better than missing out on all of those and seeing them go negative. So it was pretty interesting. I did give somebody some advice last week as well, that from the morning on Wednesday, or the afternoon of Wednesday after everything crashed, and then on Thursday when things picked back up, the advice I gave that person, they were up 10 grand. But then they didn't lock in the profits. And by Monday of this week, because of the Virgin Galactic fiasco, they went down most of that 10,000 that they were up. So, I think we're all learning lessons here, and I'm sharing these with you so that you can learn as well without actually having to pay that price. Eduardo, think the call options got to you. Going forward, you're just doing long calls on Apple. Never put all your eggs in one basket. Lesson learned. I'm not so concerned about putting all your eggs in one basket, but you don't want that one basket to be your only position. I mean, you don't want that position to be all of your funds. So like, if you make, there's a lot of people that I follow out there that say, you don't want any one trade to be greater than 2% of your portfolio, or 3%, or 5%, or 10%, whatever that case may be. So if that's all you're doing is just that trade, and it's 10%, okay, great. It can all be in one basket. If you lose it, you're not going back all that much. Now, obviously, the trades I was in, I wasn't in just one, I was in a few, but those trades had me up 100%. Just about 100% I was up. And I didn't take any of them off the table. That was the problem I had. Oliver, can you sell and buy the same stock within the same day with a cash account? Is there a rule? Yes, you can. You can, but you can't use settled funds. Or you can't use unsettled funds. You can use unsettled funds one time. You can buy with unsettled funds, but you can't sell if you used unsettled funds. So you're going to run into a good faith violation if you do that. So with a cash account, let's say you have $5,000 in the account. With a cash account, you can buy and sell half of that account in one day, but those funds will not settle. You can buy the stock, sell the stock, same day. But those funds will not settle for 2 days. Depends on your broker, but those funds may not settle. So once those funds settle, you can buy again. So what some people with cash accounts will do is if they want to day trade, they'll do half of their account for day trading one day and then half of it the next day. And that allows them to do a trade and have settled funds every other day. So I think that's how it works out. You're gonna have to work it out so that you don't end up with that good faith violation. It's not always the day trading violation that's gonna get you. So you got to watch out. BDN, they should try that space project in Pinewood Studios in England, like Star Wars. I don't know anything about that. Eduardo, same for Pfizer. You had like 30. Now you're just banking on Tesla to help me. Bummer. Alpha, Tesla goes up and down 5K daily, kind of getting numb to it. Yeah, I hear you. Oliver, does a margin account avail the good faith violation? Not necessarily. It can, because it gives you more to work with. Margin account, I think a margin account settles quicker, because you can trade that margin. You can trade that margin repeatedly, I think. I'm not exactly sure. So I have a cash account, and I keep getting hit with the good faith violation warnings if I try to trade too soon. I don't trade in my other account that has less than 25,000 in it. So I've never, prior to me getting over 25,000 in my account, I did not get a good faith violation because it was a margin account. And I basically ramped up really quickly. I knew I had to get to 25K really fast so that I could day trade. So I made sure I did that. So I guess what I'm saying is I don't have an answer to that question for you. Okay, so one thing I wanted to bring up. Oh, good. Hopefully it helps you. One thing I wanted to bring up was there was a major change in the insurance industry this last week. AG 49 came out, which is an administrative rule that changes how IULs, Index Universal Life Insurance, can be illustrated. Basically what the change did was it took away the ability of illustrations to display bonuses that the companies offer. So it restricts what an illustration can show in that it can't show a bonus indexed interest and growth in the illustration as being better than an index that does not offer a bonus, which is kind of weird because you would expect that if you were offered a bonus, if it's a free bonus, that it's going to perform better than an index that does not offer the bonus. But the illustrations will no longer allow that to be shown. So it's kind of weird. It's a lot more technical than that, and I haven't gotten into all of it. I just know that it's really changed how the illustrations are going to show up, especially the illustrations of the Allianz policies that I like to design, because my preference, like the ones that I designed for myself, is to use a 40% bonus option. Well, when I illustrate lifetime income, or not a lifetime income, but an income stream in an IUL now, and I use that 40% bonus option, it shows all the expenses that come along with that 40% bonus option, which is there's a 1% asset charge if I want to use that 40% bonus option. it shows those expenses, but it doesn't give me any credit from the actual bonus itself. So it's kind of strange. It shows a lot less income possible down the road because it limits the growth. But last week, I could illustrate the exact same product and it would put those bonuses into it and it would play out differently. So kind of strange. I'm not sure exactly how this is going to play out or how I'm going to be able to approach it, because in this short term, I can still illustrate both so I can demonstrate the differences. And I think I'm going to have to make a video on it so I can show the differences with the exact same design policy. But in the short term, I can still point to, hey, look, here's that exact same policy that I designed last week that shows you how the bonus worked. Now, I can't show you how the bonus worked, but it will still work the same way. So you could potentially see this better growth if we use the 40%. But when I illustrate the new policy, it's going to look like the 40% bonus option doesn't perform better. It looks like it performs worse than a non-bonus option or a reduced bonus option. So it's kind of strange because there's likely going to be, as we move away from this, and as people forget how it used to be able to illustrate and how it could potentially work, we're going to get to a point where agents are probably going to sell the better looking illustration, which would be the one without the bonus, even though you realistically have a better opportunity by using that bonus. So it's going to be interesting. At least I'll have my own policies that I can look at and I can demonstrate and say, here's how my own policies are performing with the bonus. But it'll be interesting the farther we move away from it. I'm not sure what that's going to do. Why are they removing the ability to do that, Top Gun Ass? The reason is because companies like Pacific Life had IULs that they have these incredible bonuses that they created out of thin air just to project better illustrations, but they charged a lot for them, like 7.5% in costs. So they would charge 7.5% in costs, but the illustration would assume that you're getting more than that 7.5% every year on average. And when those illustrations assume that you're going to get more than that every year on average, they project out very well. But in reality, there could be some negative years. There could be some negative years in the index, which give you a 0% floor. And with all those charges that they put in with it, you would go backwards 7.5%. So it was not realistic in the way that they illustrated. All the companies that didn't do that, or I should say a lot of the companies that didn't do that and didn't offer bonuses, did not like that their illustrations didn't illustrate very well. They didn't compete very well. So Pacific Life was able to sell a lot of illustrations based on that. They're also under not investigation. They're in a lawsuit. They're having to defend themselves because of those illustrations as well. Allianz did not do that. They have guaranteed bonuses. They have a very small amount that you could pay extra if you want to get an extra bonus, which is a 1%, that 1% charge that comes with the 40%. But then they offer bonuses that are free as well, a little bit reduced. So Allianz did not do the same thing, but the fixes, because of that, still affect how we can illustrate things. And so because of all of those problems, it really changes. It really is going to change the whole thing on how we illustrate those. CDG, you think AG49A? Yeah, it's AG49A. Correct. I had only said AG49 earlier. It's AG49A that replaced AG49. So CDG, you think it's also changing the max illustrated difference between loan credit rate and loan interest rate? Yes, you are right. From 1% to 0.5%. Absolutely. And that makes a big difference as well. So prior to this, prior to AG49A, we had AG49, which limited the projected rate. When we just borrow from the account, it would assume that if the loan rate, in Allianz's case, if the loan rate is 5%, which is their fixed rate for the life of the policy, it would assume that at most you could earn a 6% return to offset that. So when we get into retirement and we want to take an income stream, we're going to borrow and we're not going to pay back those loans, but we still have the ability to earn in the index 1% higher than that. That's what we could illustrate. In reality, we could earn a lot more than that if we have really good returns, and we would have seen that over the last decade. So it is a reality that you could see a higher return, and we anticipate that. But AG 49 reduces what we can display to 0.5%. So 5.5% will be the max. And so that in turn also reduces the projected income. So as I'm moving forward, if I'm designing these policies the exact same way, everything else is the same, all the limits, the caps, the participation rates, all the same. I'm really thinking the actual return is going to be better than what I can illustrate on these things. We'll end up seeing how it goes. I'm glad I bought my policies ahead of time, so I'll be able to look to those and see what the actual return is compared to what I have to illustrate, because I think that'll be important information to know. But it is going to provide a challenge. It is going to provide a challenge. It's going to benefit companies that did not want to offer bonuses, that did not want to offer you the ability to have that greater growth, and it'll benefit whole life companies that want to compete better against the IULs. It will also benefit, and this is a big one, it will also benefit the companies that like to sell the VULs, the variable universal life policies. VULs are 100% at risk in the stock market. You have no downside protections. I mean, I could make a pretty good case. I saw that Penn Mutual podcast about that. I listened to it. Yeah, that was good. That was a good podcast. And it was funny because the guy, that was where I came up with the VUL comment, because the guy that was talking about it, and he was happy about the changes. He likes the VULs. And if you look at most of the people that work for these companies, that sell and work directly for these companies, they like the VUL products. It's more money for the carriers. It's more money for the insurance carriers. It takes off any of the risk that they have for having to generate the returns, because all they need to do is take your money and put it into the market and let the market give you your returns. So there's a lot more money in it for the insurance companies in that regard. So they love the VULs. This does, when I look at the differences between the two, I can see down the road how limiting how IULs can illustrate gives an advantage to the agent that has a VUL that they can put side by side with it. Now, I don't think it actually makes a VUL more attractive, but that's just me. Like, if I'm going to be in the marketplace, I would just rather be in the marketplace. I don't want the fees associated with a VUL. The VULs, all the ones that I've seen, are tied to indexes that have a lot higher fees. You can get indexes outside the market with almost no fees, like super, super low fees. They're substantially higher, 10 times higher probably, inside a life insurance policy on the VUL. So I don't see that the main reason why you would go with the VUL as opposed to just being in the market is you get that tax-free growth. You get the tax-free growth, and you get the death benefit that goes along with it. But the death benefit you're paying for. So I don't see the advantage of the VULs as opposed to what we get from the IULs and whole life, which is the guarantees that we're not in the marketplace, and we aren't paying those extra costs. We're not paying those extra management costs. So pretty interesting. Pretty interesting. Let me know if you guys have any thoughts about that. Appreciate your comments, CDG. Nick, good evening, sir. Alpha Omega, what do we think of AIV? Apartment Investors and Management. That is who Tesla replaced in the S&P 500. I don't know what to think of them. It looked like they dropped 85% yesterday, but they didn't really. What happened was they split. And they timed their split to happen after they got kicked out of the S&P 500. So AIV is actually going to only retain 10% of the assets of the prior company, the one that they split off is going to get 90% of the assets. So, not sure what's going on there. I just know that that's what's happening. I haven't looked into it beyond that. Eduardo, I know I keep bringing up the same topic. Sorry about that. What would you do if you're in my situation? You're only 18 and rather take advice from someone more experienced. What's the question? I missed the question. Repeat the question for me. I will do my best to answer and help you out. I love it that you're 18 and you're paying attention to your finances, though. Love it. Because you've got so many years ahead of you that you're going to be able to compound your gains, that you're saving and investing, that it's just going to be silly. You're really giving yourself a great start. Let's see. Oliver, is there anything COVID did to disrupt the insurance industry? Sort of. Any new policies related to COVID? Yeah, what it did to disrupt the insurance industry is it kicked all of these old school companies in the butt to make electronic applications a reality, to upgrade their system and make it a lot easier. And it also accelerated their move to not having full medical exams. So a lot of companies have been shifting to more accelerated underwriting programs. And what we saw after COVID was almost every company instituted an accelerated underwriting program that was more robust. It included more people. And the accelerated underwriting programs don't require an actual in-person medical exam with blood and urine. What they try to do is they try to get the health information that they need from some type of a questionnaire or phone call that they can fill out a questionnaire from, and then ordering records from doctors. So that was the big disruption that happened in the insurance industry due to COVID. Good question. Top Gun really wants to build a spreadsheet for IUL analysis. Have you heard of Truth Concepts Analytical Software? I've heard of it, but I have never tried it. I've only heard of it in the podcasts I listen to. So I wonder if they'll have something for that. That'd be interesting. That would be interesting. You believe Allianz is illustrated very conservatively. I think so too. I believe so as well. It was interesting to see and hear in that Penn Mutual podcast that CDG was just referencing. They talked about how there are some companies already that are working on ways to get around the regulations. So I'm not sure which companies they were referring to, but it'll be interesting to see which ones that is. Essentially, one of the ways to get around it, though, is to have a benchmark index that is virtual. It's not the actual benchmark index that you use. So some companies are taking what used to be the benchmark index, and that determined what you had to illustrate for a minimum or the maximum you can illustrate in an illustration. They're taking that benchmark index, they're adding something to it, or they're changing the parameters of it so it's no longer considered their benchmark index, and then they're using a virtual benchmark index that you can't actually use in your policy. Because one of the ways to get around the regulations is if you don't have a benchmark index, you can use a virtual one that people don't have actual access to as a client, but it can be used to set your rate, your illustration rate. So kind of interesting how they made that, or how they're going to work to get around that. I don't know how I feel about that. I mean, I'm not too big on trying to skirt regulations, but I'm interested in how do we actually demonstrate how the bonuses are going to work if they're still going to offer the bonuses, but it doesn't show the results in the illustrations. Oliver, what got me into life insurance? A buddy of mine. A buddy of mine lived nearby. He's since moved, but he was doing big in this insurance company that he worked for, traveling all the time, but making a bunch of money. Talked me into, talked my wife into doing it because she was looking to change jobs. She got started doing all the education and got her license. And basically, I was at a crossroads as to what I was going to do. I was doing real estate, but I had stepped back for a while because I ran for office. I ran for county commissioner here in Lane County. Ran for office, and I lost my race, and I was like, what am I going to do? I could go back into real estate, but I'm seeing what she had the potential here with insurance, and so I was like, I'll just get my insurance license, and we'll both do it. So I got my insurance license. We were both going to do it. I started to get trained, and it turned out to not be, well, she ended up with another job offer that she really liked with a nonprofit. And it was with somebody she worked with before, and the money was good. And so she decided to take that one. I decided to hop in and do the insurance thing. And if that worked out, then maybe she would get back into it. Well, immediately I got into the insurance thing, and I came across this concept. And so, like, everything that I started focusing on had to do with numbers and maximizing cash flow and doing all this stuff. And she got really intimidated about that and was like, okay, I'm not going to do the insurance thing. She's just doing the job that she got hired for, which she really loves. She's executive manager of autism nonprofit. And so she decided to just do that. I decided to do this, and it's been great. And I started the YouTube channel, and bada bing, bada boom. Now we're here. So, Alpha Mega. So that's why it dropped 90%. Yeah, AIV dropped 90% because of the asset. Because of the split, not because they got kicked out of the S&P 500. They got dumped and delisted. Oh, I didn't notice that they got delisted. But yeah, I think that was the plan all along, though, because that's why they gave 90% of their assets to the other company. Perot, did you guys get into New Providence, another promising SPAC that's cheap right now? I have not heard about that one at all. They have tech for connecting satellite to your smartphone instead of bricks. Interesting. Kind of like Starlink, huh? Like Starlink? Eduardo, currently have options for Tesla tomorrow and Palantir for next week. I'm assuming that means Palantir. And Pfizer for the end of the year. The options for Tesla, I'm assuming, are for the 18th, not tomorrow. Those ones I would be a little bit concerned about because we don't know what's going to happen. We don't know what's going to happen on the 18th. It's probably we're not going to get the squeeze, all the volume that we need to get that squeeze until the last hour on Friday. At that point, your options are probably either already sold off by your broker, or the price hasn't moved enough and they've gone way down in value that you get scared and you're going to have to sell them anyways. So if they're worth money tomorrow, if you're in the positive tomorrow, if I had those options, I would take the profits, buy back in for maybe on the 24th, or just take the profits and be happy. But I would probably buy back in or transfer something to the 24th. If you have options that expire on the 24th, you can hold them and trade during that last 10 minutes, during that last hour, when that squeeze happens on Friday. But if you have options expiring on the 18th, I don't think you're going to be able to do it. So that's my thinking on those. What do I think of investing in REITs? I think REITs can be a good opportunity. They have some really good dividends. It's not what I'm looking for because the dividends aren't a high enough return on my investing. But if you wanted to diversify a little bit of your portfolio and have some of it in the REITs earning the dividends, I think that's a solid play. Oh, Eduardo, you were serious about how do you flip your account from 6K to 17K? You got to be a little bit patient, usually, unless you're going to take some more major risks. You got to do some safer plays. My way to do that would be to look hard at some debit spreads. That's a pretty good way to do that. But you got to have the right play. Tesla has really high IV right now, so I'm looking at credit spreads for doing that. But the return on those is solid. Like you could probably get close to a 30% return in a week. Or, yeah, in a week or two. But a debit spread, you can get a return of 100% in a week or two. So you got to decide what strategy works for you, what you're knowledgeable enough to trade with, and if you have the right play. Because you can't just take any old debit spread and think, oh, I'm going to make 100%. Probably not. The stock does have to move enough to make that happen. So there's a lot to go into it. Nothing I can basically counsel you on to do today. You currently have options. Oh, yeah. Okay. So most of your capital is in those trades. You don't know how to get out now that you want to. Gotcha. So tell me, I'll try to help you out. Tell me about your positions, more specifically for Palantir and Pfizer, and I will look at those stocks and maybe advise you on what I would probably do if I was in those positions. Doesn't mean you should do it, but you can at least take what I would do and see how that applies to your strategy, what you're comfortable with. It might give you an idea, maybe something you hadn't thought of. Perot got some shares in that for $100. Or for, yeah, nice. Okay. Top Gun, have you given any recent thoughts to investing in crypto, forex, or futures? Not much thought. I'm trying to get money off of I have a 0% credit card for another 12 or 15 months. I'm trying to get some money off that card. I was thinking of trying to do it by getting into crypto and then getting out of it. But that was the most I've thought about as far as crypto. Speaking of which, I need to talk to you about if there's some way that you can help me get money off that credit card. So if you, for your business, if there's a way you can take credit cards to maybe secure a down payment, that would be awesome. That would make everything that we talked about earlier today, that would make it perfect. And you can do that by just signing up for a business PayPal account too. So if you could sign up for a business PayPal account, we can make something like that work. So we need to talk a little bit later. Alpha Mega to Eduardo. That's how you turn your 6K into 17K. Hold it in someplace safe till Starlink IPOs, then go all in. Funny. BDN. So you have the broker put a note in the account not to close the trade and wait for an hour. Like 1 p.m. Pacific date. Oh, good. All right. I mean, I probably wouldn't wait until then because that's like the end of the day. But I would say have them hold it until that last 5 minutes. If you can do that. Your broker said have the options agent put a note in the account saying hold for an hour before close. You don't want to hold for an hour before close, but maybe they can hold it for 10 minutes till close or 5 minutes before close. That might be a great way to do it. So thank you, BDN. Yes. You may need to call your broker. So Eduardo, call your broker about your 1218 options expiring with Tesla and find out if they can hold it, not sell it at an hour before close. Most of them are primed to sell it an hour before close if you don't have enough money in the account to actually buy the shares should it end up being in the money. But if they know that you're going to sell them, or if they have instructions to sell them 10 minutes before close, that might work out pretty good. You can just say, hey, market order 10 minutes before close, make that happen instead. That might work out pretty good. Top Gun to Oliver. If you want to hear more about real estate investments, I'd love to show you some stuff on Discord. Top Gun is in our Discord. He's in our mastermind group. We have a real estate mastermind one. But if you're not in the mastermind, hit him up on, just private message him on Discord. A lot of good information that he can share with you. Harry Bowman, how you doing? Is it now morning for you, or is it really late in the evening? Abdul, 12 hours early there. All right, well, you and Harry are same place. So does that mean it's... Oh, yeah, 2:41 a.m. Okay, really early. You're up late then, I'm assuming. Eduardo, for Palantir, you have options expiring 12/24, strike price of 28. You're currently down 2.5K. You have 14 contracts. Ooh, ouch. Okay. It's always tough when you're in a down position. Let's take a quick look at Palantir. I have no idea about that stock. So let me look at the graph. Harry can do technical analysis, though. Might be good to ask Harry. So, Palantir. Palantir was up at 33 a few days ago. Now it's end of November. Even at 30 a week ago. A little over a week ago. And now it's down. So that's why you're down. You're down because the price went down, right? It's also you got theta not helping you out. It looks like there's pretty decent support here at the $24 level. We're at $25.92 right now, but it did dip down to right about 25. A lot of support, maybe a little bit higher up at that 25 level. Stochastic is pointing down, RSI pointing down on the daily. Odds are it's not going to go up yet, but it is getting down near the bottom where it could turn, and stochastic could turn up. So you might see it turn up before the 24th. You still have some time, but you're going to be facing some problems. You're going to be facing some problems with that time decay. That time decay is going to go really fast in the next week and a half. That's the problem with options. So you got to learn this lesson. You're learning this lesson hard right now. Options decay very, very quickly in the last 2 weeks. You don't want to hold them on that long. If you're up before those last 2 weeks, get out of them. Buy a couple of weeks later than that. Okay, take your profits, buy them again a little bit later. That way you're not fighting that time decay. It is never a good idea to hold straight calls all the way until expiration unless you already bought them cheap. So, or if you're already way in the money. If you're already way in the money, you can hold on to them. But usually the odds are that time is already priced into it along with the movement that put you in the money. It's almost never worth it to hold them for those 2 weeks. Anytime I buy an option within 2 weeks, it's a quick trade. We're going to be in and out in 5 minutes, hopefully. Not more than an hour, because you're just losing too much money to time. Down 2.5K right now. What is your overall position? So you're down 2.5K, but if you sold it right now, how much does that give you back? Because you might be in a position that if I was in that position, I might have to just take my losses and figure I'll make it up on another trade. It's really hard. It's really hard to lock in those losses. But sometimes it's the best move when it comes to options and you're running out of time. That is the most dangerous thing about options, is that time factor. You currently have 1.3K left. Okay, so you've lost most of it. You've lost most of it because the price went down, and now you're getting into the time decay part. Boy, that's a tough place to be in. What Stock Guru has been talking about Palantir lately? Do you follow his channel? And if so, what does he say about what he expects to happen over the next couple of days? Friday's probably going to be really volatile. So I don't know if it's going to be going up, but that guy's been pretty spot on. Not about Tesla lately. He was last week, but it's a pretty volatile time for Tesla. But I would look and see what other people are saying about Palantir and what they expect to happen. People who have a track record of being right. And maybe go off of that. If Palantir is going to go up substantially, in the next couple of days, it might be okay to hold on to it and see it go up. Due for a breakout since RSI is reset. I don't see the reset on the daily chart yet. I don't see the reset on the daily chart yet. Let me look at 4 hours. Okay, on 4 hours it's turned up. Turned up on the 4-hour chart. So on the daily chart it hasn't. On the 1-hour chart it's diverging. You got RSI going down, stochastic going up. So yeah, I don't know. I'm not good enough on the technical analysis to tell you which one I would trust over the other. It's still in the red on the 4-hour chart, but it has turned up. MACD's in the red. Oh, why did that just switch? Stochastic. Go back to that. Okay. Yeah, I don't know. That one's a tough one. You're in a tough position. You follow him in Lucid Trading. They're saying it's due for a breakout to the $30 mark. Okay, and your calls are for what strike price? Strike price of 28. So what's your break even? What's your break even? If it hits 30, is that above your break even? Because if that's above your break even, maybe you can hold it till the 24th. If it's going to break up before the 24th, then it might be worth it. But you got to look at what your break even is. I don't know how much you paid for those calls. You got 14 of them, 15 of them. $30.41. Okay. So in that case, you may not, if it does break up, and it does hit 30, you might be okay. You will not, even if it just hits 30, you're not going to lose much money. You'll still lose money, but you're not going to lose much money. You'll have a gain from where you're at now. But that's requiring that to go up. So you're going to have to decide how much you trust those guys on how much it's going to go up. At this point, I would ignore the loss and look at it as a purchase of $1,500. You've got $1,500. Is it a good use of $1,500 to make that bet between now and the 24th? Is it a good use of that $1,500? Or is there a better place that you can put that $1,500? That's probably how I would look at it at this point. You got to ignore the loss. Look at it as a fresh trade. If you would take $1,500 right now and put it on that bet, then I would probably hold. You can sell some and leave some in. That might be, if you have $1,500 and you thought, you know what, I'm okay putting some of my $1,500, I'm okay putting some of that into this bet, knowing that they're projecting it to go up, okay, then that's okay. But you got to decide how much of that $1,500. And that might tell you how much to sell off. Yeah, I'm up late today, for sure. Okay, so now let me get to the next part of your question, which is Pfizer. For Pfizer, you have 4 contracts on the date 1/22, strike price of 41, currently down 700. Okay, 1/22, January of 22 or January 22nd of 21. I'm assuming that's January of 2022, which that's awesome. I would just sit on those. I don't know why you're down 700. Pfizer must have really tanked. But you got a long ways to go, plenty of time. The time decay doesn't hardly eat up anything when it's out that far. So yours will move mostly based on the stock price moving and IV. Pfizer's putting out vaccines. If those vaccines prove to be good, we could see that go up. As they get government contracts to give away their vaccine, that price could go up. So I wouldn't worry about the Pfizer one just because it's so far out. Sovan came to say hi. How you doing, my man? Sovan was our benefactor, gave away the laptops, so much appreciated. Everybody should thank him for that. It was awesome. Bitcoin close to 22K now. Wow. $44,000 volume for option calls, 30 strike price, expiring 12/18. What's that on? If you profit, lock it in. Wait for a dip and rebuy. Don't hold for too long. Max profit. Yeah, that's you just got to lock in some profits. I got to learn that too. Nick, told yourself to buy Ethereum 2 weeks ago. Dang it, you got to listen to yourself. Oh, Ethereum was doing good, huh? Oliver said his portfolio is 100% in Tesla. What do you recommend? You feel confident about Tesla in the future, but looking for some other stocks to alleviate the hit on Tesla on a bad day. I wouldn't worry too much about it. I mean, if you believe in Tesla, don't worry about the hits on a bad day. You'll have a good day to follow up. That's my thinking. If you got 100% in Tesla, I'm assuming you have at least 100 shares. If you don't have 100 shares, you don't have enough Tesla yet. That's my opinion. The goal is to get to 100 shares so you can sell covered calls. Because if you can sell covered calls, not only do you get to sit on those lovely, lovely Tesla shares that you expect to do big things in the future, but you can also make some pretty good money selling premium on them outside of the money every single week. That's a nice thing to be able to do. And that's what you do, and that's what alleviates the bad days. So I don't have any issues being 100% in Tesla. I wouldn't have any issue being 100% in Tesla for me, because that's how I would play it. Now, maybe you just get some FOMO and you want to play in some other stocks. You'll have to decide what you feel comfortable with. Maybe diversify outside of the EV market. Abdul, WNW went up nearly 500% in one day. Was going to put L200 in, but didn't. Always make the wrong decisions. Oh, man. I didn't even know about WNW, that it was a possibility that would happen. Hadn't even heard about it. The IPO just started yesterday. So, I missed out as well. Wes Brown, cut his losses on Palantir. May buy calls with more time. Move to Baba calls. Made up your losses. Now just sitting waiting for confirmation. Very good. Very good. Eduardo thinks he should sell some calls and leave some in, sell without some. Okay, yeah. Nick, dang, with Bitcoin breaking out well above the old resistance, who knows how far it goes? Question is, does it ever drop massively again like it normally does after an election? Yeah, I don't know. That 20K may be the support level now instead of the resistance. Oliver, what's the most you've gained from options? I'm currently sitting on 2 Tesla options right now that are up 28,000. So that's probably the most. I did have some space options that were up 10 grand last week that lost all their value, but I didn't sell them. Could have made good money. Well, no, those ones hadn't lost all their value yet. But I was up substantially more than I am now, which I'm down. But they haven't gone to nothing. I had some Tesla ones that were up over 10,000. Probably about 14,000 they were up. 14 or 15,000. And those ones came back down to 10,000. I sold those. But I could have, if I waited on those, I could have had 20,000 profit. But those ones, after I learned my lesson last Wednesday, I locked in those profits this week. Looking to put that money back into something else now. So I decided not to push it to the end. Hopefully that works out well for me. Sovan, so bored about Bitcoin at 20K. Now you're actually profiting. Hey, how are you bored at that? Bitcoin, you're almost 2 grand up. Well, I'm assuming you have one full Bitcoin. Maybe you're not 2 grand up, but you're up substantially. Eduardo, thanks for the advice. Going to sell Tesla tomorrow. 1K at Palantir as well. Okay. Good luck, man. I hope it works out for you. Let me know how it goes. Perot, lost 400 on Pfizer. Sticking with stocks that have worked for you. Tech stocks like Tesla and Amazon. There you go. Don't be afraid to specialize in stocks that you know. Kelman, how's it going? Going pretty good. Although my voice, starting to feel it. I've been talking all day. Oliver, 137 shares of Tesla, 100% of your portfolio. You've seen gains like 6.5K a day. Okay, cool. So, I guess as long as you keep 100 shares that you can sell covered calls on, I would be cool with that. Sell the 37 at the high point this time. Use those to diversify. I don't see any issue with that. You could always sell those 37 and when the price drops after inclusion, you could buy a leap with it. You could buy some leaps with it and sell covered calls on those. So you could turn those into even better opportunities with Tesla. Still be in 100% Tesla, but you could do more with them. Every time you sell a covered call with that leap, you could buy a Tesla stock. That would be a good way to approach it. That's what I should be doing. You just buy another Tesla stock with each premium option that you sell. Anyway, and then you'll build back up your shares of your actual shares that way. I bet if you did that, I bet that would turn out pretty good. Or you can use those to buy in other stocks. Your choice. Sovan, your portfolio will build over time. People say to diversify is to offset the loss and gain between each stock. Yeah, that's true. Ethereum's up $100 in the last few weeks, running just like Bitcoin. Wow. Very good. Perot, until you get assigned. Yeah, but if you have the stocks, it's okay to get assigned. You obviously, here's the deal. If I had Tesla and I did not want to get assigned, I would sell $100 outside the money. You can get pretty good money. You can get pretty solid premium, $100 outside the money. And then what happens if it goes up? If you get assigned, that means somebody just paid you $100 more for every share within a span of a week. I would be okay with that. That's a lot of profit. You're talking $100 it went up on 100 shares. You're talking you just made 10 grand plus whatever they paid you for selling that covered call in 1 week. I think I'd be okay with that. Stock. Don't know if you're into SPAC stuff, but I found a space SPAC NPA. Apparently, it gives the consumer direct 5G access from satellite. But unlike Starlink, there's no on-ground work needed. They are wanting to join up with SpaceX. What do you mean by wanting to join up with SpaceX? I mean, Starlink is a part of SpaceX. Are they wanting to join up with Starlink? And what is no groundwork needed? Everything has to connect with the ground at some point, because that's how you connect with everything else. That's how the internet works. The internet works on the ground. Nick, so far away from 100 shares of Tesla. It's rough. I mean, you're talking 60 grand worth of stock right now. 62 grand, 63. It's expensive. M-Cave, after buying Tesla since June, you hit 101 shares last week. Guess you're good for now. Very nice. Congratulations. There's a lot you can do with 100 shares. There's so many people that are sitting on hundreds of shares that don't do anything with it except let it sit there. Like, that's not maximizing your cash flow, people. I'm here to help you maximize your cash flow. That's why I'm talking about selling covered calls. There's a safe way to do it. Nick, too rich for your blood, but if it wasn't, well worth it. But you're working on figuring out how you can sell those covered calls on NNDM. NNDM, you can do it. It just doesn't give you very much money. And the problem is NNDM can break out at any time. And when it does break out, you're not going to want to be in a position where you had covered calls being sold, because it's going to limit how much you end up making. So NNDM's a tough one. I wouldn't worry about it. I wouldn't worry about selling covered calls on them unless it's like Wednesday of this week and you don't think it's going to break out in the next 2 days. You might get a few bucks for every 100 shares you got on something that's like right now where it's at. You could probably get a few bucks for selling it at a $10 strike price. So if a $10 strike price, if you're happy with selling those shares at $10, okay, great. But if it breaks out, it could go up to $12. It could go up to $14, right? We don't know where it's going to break out to when they decide on who they're going to acquire. So you got to weigh those different things. DF Kai, what's up? Good evening to you too. Wes Brown, with volatility increasing, you're thinking of playing TLT calls. Money comes out of the market into bonds. It's looking very similar to what it did last year at this time before skyrocketing. What is TLT? What is TLT? Oliver, man, wish you did my Tesla covered calls for me. We can split the profit. We can arrange that. We can arrange that. I'd be happy to help you out. Can you sell covered calls in a cash account? Yes. Yes, you can. DF Kai had a Tesla option, 900 strike pre-split, turned into 5 options, 180 strike. Wow. Sold one, exercised the other 4, ended up with 400 shares, holding long-term for retirement. Well done. Well done. That's awesome. That's awesome. Big win. Stock Journey. Definitely need to do more research on this company. It's fairly new. You'll get back to your question when you find out more. Okay. Sounds good. Sounds good. Oliver, if you want to talk about that, let's have a meeting. Let's have a meeting. You know how to sign up for a meeting with me, right? calendly.com/cashflowpro. Eduardo, does time decay already factor for the whole trading day tomorrow, aside from stock price? Not necessarily. Not necessarily. It does, yeah, it basically factors in every day until expiration. So it doesn't do it exactly evenly. It like decays throughout the day. So at the beginning of the day, your stock price is going to be, if it trades straight sideways, you're going to lose a lot of value during the day. And then again, overnight, you lose a little bit more overnight. So yeah, it does factor in every day until expiration from wherever you're at now. And it can be brutal. So Tesla options right now. Let me tell you time decay on Tesla. These are not, I would not buy a naked Tesla option or just a straight Tesla call or a put. It expires in 2 days. If you want to buy an at the money $625, $1,800 for that call. Your time decay is $500 a day. And that's not even in the money. That's not even in the money. $500 a day. I'm surprised it's not more than that. But the reason it's so expensive is because it's anticipated it's going to go up quite a bit more than that. Your break even, if you bought that right now, which you can't, but your break even is $643.80. So that stock has to move by almost $20 in 2 days just to pay for that option. Pretty crazy. What's the difference between a debit cred and a debit and a credit spread? The difference is, do you pay money to open it or do you get money to open it? If you get money to open it, it's a credit spread. You're earning a credit. And to get that, You have to sell the options. Your net effect is you're selling a more expensive option than you're buying. A debit spread means you're paying more. That means you're buying a more expensive option than you're selling. So if it's a call, you're going to, and a debit spread on a call, you're going to buy the lower strike price because that's more expensive. You're going to buy the one that's closer to in the money, that's more expensive, and you're going to sell farther away from in the money. That one's less expensive. That creates a debit. If you want a credit spread, flip that. You're going to sell closer to in the money. Doesn't matter where it's at. You're going to sell closer to in the money, and you're going to buy a little farther out of the money so that you get a credit. And then it's the opposite with puts. With puts, you're going to buy the one that's closer to in the money. You're still buying closer to in the money. That's the best way to think about it. A debit spread, you're buying closer to in the money, whether it's a put or a call, and you're selling farther away from in the money. A credit spread, you're doing the opposite. Eduardo, definitely selling it open then. Well, it's don't just blanket sell it open. If it gaps up overnight, might be a good idea to sell it open, but it could go up tomorrow. It could go up tomorrow. So you're going to have to decide. If it moves up quickly, you're going to gain value very quickly. If it drops, you're going to lose value very quickly. It's going to move. Tesla always moves in the morning quite a bit. It's going to move more than you lose value in time decay in the morning. So I wouldn't necessarily just sell it open. Look at what the stock is telling you and if you think it's going to go up or down. And then make your decision based on that. Not just off of time decay. Stock. Should have bought some calls on Tesla after inclusion announcement. You were worried about volatility though, risk management. I hear you. I wish I would have done the same thing. I had too much money tied up in other trades at the moment that I couldn't get out of for like 3 days. And so I missed that huge run up. Oh, I'm kicking myself. It would have been a no-brainer to buy some debit spreads right at announcement. Oh man, I would have made so much money. With debit spreads, it's so easy. If you know that there's going to be a massive movement like that, easily could have quadrupled or 10x'd my money with a credit spread, with a debit spread. Would have been so easy. Perot, you need collateral for credit spreads though, right? Yes, you do need collateral for credit spreads. So, good point. With a credit spread, whatever the difference between the strike price, you're going to need that for collateral. So if you've got $10 between strike price, multiply that times 100, you're going to need $1,000 for collateral. So you get a credit right away, but your collateral doesn't go away until you either buy that back for less hopefully, or it expires. With debit spreads, your risk, and that 1,000 is what you have at risk. With a debit spread, you're only at risk for what you spent. Wes Brown, be careful with credit spreads and know that you have to put up collateral. You can reach your max loss if it goes against you. Yes, the biggest risk with credit spreads is a gap up or gap down that blows right through your strike price. If it doesn't gap up or down and it moves toward, if it looks like it's going to move toward and through it, you can sell out of it. You won't have much of a loss until it gets all the way through it. And then some. You won't have much of a loss. So you have time to get out of it. But if it gaps up or down and it blows right through it, you can lose almost the full collateral pretty quickly if it continues to keep going and you never have a chance to get out of it. If you have the two legs, the limit would be the credit. Yes. Yep. Oliver, right now just buying and holding, but it would be nice to learn options. You just don't want to lose your position. Gotcha. We can make that work. We can make that work for sure. Sovan made 7K, bought the calls one day after announcement. Good for you. That was the way to do it. Best time to buy those calls. Perot, there's no free money in stocks. That's true. It's always at risk. It's always at risk. Eduardo used to do that for SPY. Bitcoin just reached 22K right now, according to Low Roller. Wow, congratulations to the Bitcoin bulls. 22,183. Stock was tied up in cannabis prior to the Act House hearings. Yep, the more Act House hearings. Yep. Wes, he sells credit spreads the day before expiration, at least one standard deviation. There you go. I tried to do that with SPY, and I got screwed. I tried it a couple of times on SPY, and it just moved right through my strike price. I was like, God dang it, what the heck? Like, I looked at how much it moved for the last 2 weeks, and I went farther than it had moved in any one given day. And the day before I sold it, and it jumped up past it. What the hell? Nick's getting FOMO on Bitcoin. Wes, happened to you a month ago. I know, and the crappy thing about that is you don't get much money for it. And so when it blows through, you just lost out on a whole bunch. Like, I had made a bunch of money on credit spreads for that week, and that one that it blew through lost everything I had gained that week on my other credit spreads. So that was when I switched to debit spreads. although there is a time, there are better times than others for doing credit or debit spreads. Right now, with high volatility on Tesla, I just sold some credit spreads that are way outside the money, and I sold it for after the event where we're expecting a drop, and I got really good return. So I got a 30% credit on what I had to put up for collateral. I got, the risk is $1,000. I got $300. December 31st, 690 to 700 credit spread. So getting $300, that means Tesla will have to be over 710 on December 31st for me to lose all of that premium. For me to have lost the max amount on that. All right, I can handle that. I can handle that. Wes lost all his earnings for 2 weeks doing it with SPY. I hear you. Selling premium on Tesla's money. Yeah, because Tesla, you can do it so far outside of the money. So far outside of the money. Although it's funny, though, because you still don't know if Tesla will actually blow through your strike price. It just usually doesn't do it. It just doesn't usually do it gapping up and down overnight. So that makes it good. That makes it good. Because if it starts to move quick, you can always just buy out of it before your max loss. Even before much of a loss at all. Perot thinks space will drop tomorrow. Apparently Chamath sold 3.8 million shares in the last 2 days. No wonder it went down. No wonder it went down so much. Interesting. That's unfortunate. I would think it would probably go up tomorrow then, if he's still not selling off more shares. That's probably why it went up today. All of the selling pressure was relieved. Low roller, not a good time to buy Bitcoin. Wait for a Bitcoin correction. You can see it drop under 20K one more time. You can buy Bitcoin on the dip. BDN, dang. Yeah. DF Kai, that Emmett Peppers guy has 40,000 shares of Tesla. Insane. Yeah, well, he's got a fund. He's got like a hedge fund. All right, my voice is gone. I'm gonna have to end this live stream so I can still talk tomorrow. But it's been great talking with you guys. I hope we provided some value, answered some questions, help you make some money, maximize your cash flow. I appreciate you guys being here. Be sure, if you're interested, join our Discord. If you're in our Discord before Monday, you got the option to win some Tesla tequila. I bought some Tesla tequila. I'm giving it away to somebody in our Discord on Monday, the day of Tesla's inclusion. So, hope to see you guys in there. I'm pretty wiped out. Gonna have to get some dinner and get some rest. So, have a good night, everybody. And let's go make some money tomorrow. Wes joined the Discord yesterday. All right. Oh, yeah, you did. You're going to see your name. I added you. You got in our patron. You're going to see your name on my thank you list. Here on the, when I play you guys out with some music. Top Gun, you're already entered into it if you're in the Discord. You don't have to do anything.